The meeting of the Eastpointe City Council on Tuesday, December the 8th, 2015 at 6 p.m. Please call the roll.
Councilperson DeMonico?
Here.
Councilperson Lucido?
Here.
Councilperson Kleinfeld?
Here.
Councilperson Marion?
Here.
Mayor Pixley?
Here. Our sole purpose tonight is the presentation of the annual financial report and the report of the independent auditors. And to explain that, I'd like Mr. Duchesne, as city manager, to give an overview.
Thank you, Mayor. In the transmittal letter, we indicate the purpose and process regarding the requirements of presenting an annual financial report. So according to the city charter, state statute, which is Public Act 2 of 1968, this is the annual financial report on the financial position and activity of the city of Eastpointe for a period of time ending June 30th of 2015. The financial statements and supplemental schedules contained in this report have been audited by Plant Moran, certified public accountants. The responsibility for the accuracy of the data and the completeness and fairness of the presentation, including all disclosures, rests with management and administration of the city. To the best of our knowledge and belief, the enclosed data is accurate in all material aspects, and the report are reported in a manner that fairly represents the financial position, the results of operations of the various funds and component units for the city of Eastpointe for this fiscal year. All disclosures necessary to enable the reader to gain an understanding of the city of Eastpointe activities have been included. The financial report is presented to you in two sections, the introductory and financial sections. The introductory section, which is an unaudited, is the letter of transmittal. The financial section includes the entity-wide financial statements, the fund financial statements and schedules, as well as the independent auditor's report on these financial statements and schedules. The required supplemental section includes management's discussion and analysis of the information presented on all the financials in the pension plan. Other supplemental information includes combining and individual fund financial statements. Generally accepted accounting principles require that management provide a narrative introduction, overview, and analysis to accompany the basic financial statements in the form of management's discussion and analysis, or what's known as the MD&A. This letter of transmittal is designated to complement the MD&A and should be read in conjunction with it. The City of Eastpointe's MD&A can be found immediately, immediately followed the report of the independent auditor. The City of Eastpointe exemplifies what I think is best in Macomb County regarding value to cost of city services, a road system, active community placemaking efforts, and organization. A variety of opportunities for residents and business and community to live and flourish. It is an aggressively fiscally managed and solid community as we look at it today, with many advantages because of affordable housing mix, a business climate, and convenient access to other businesses and residential areas in southeastern Michigan. We now have over 800 commercial industrial businesses, and the city is proud to point out the fact that almost 91% of our buildings are single-family homes or condominiums. Now, how Eastpointe compares financially in the region is mentioned and highlighted in the letter. With cities within the Southeast Michigan Council of Governments, in the city of Eastpointe, with total expenditures of $25 million, places 28th in terms of total expenditures for fiscal year 2014-15, and 77th in terms of expenditures per resident. That means the city spends about $769 per capita, $391 less than the regional average for the cities. In transmitting this to Council, we reviewed the major accomplishments and the result of operations for the fiscal year ended in 2015. The recent years certainly have not been without challenges. With the passage of the special public safety focused millage to fund the collaborative South Oakland-Macomb Regional Service Authority, the next 20 appear to have improved and stabilized revenue for the Eastpointe city government. Despite some serious financial constraints, there were, though, significant accomplishments in the fiscal year 14-15 and with many more anticipated in the years ahead. As we pass the mid-decade benchmark, I thought it was appropriate to consider the investment in services operations that have resulted from this integral part of fiscal management and operations of the city. So we presented 5-year accomplishments which range from those things we did to make an effective government, including awards from the Government Finance Officers Association, reduction in our costs through negotiations, utilization of options of types of service, including private contracting. We included and launched some services electronically that we had not done before. And of course, in a safe city with the voter-approved millage, we'll be able to add more things such as operational things like police officers and firefighters in the streets. We also approved a special assessment for street lighting that allowed the city to begin a conversion to LED that has already showed substantial positive savings. In the strong local economy, we have a recognition that the city is an e-city for entrepreneurial growth from the University of Michigan. We have seen developments such as Michigan First Credit Union, Colonial Dodge property, final sale being done for redevelopment, establishment of Action Impact Gun Store, and we have become one of 3 communities in Michigan to earn redevelopment ready certification. In great neighborhoods, we have a second housing complex being erected after Oakwood. There's Grafton Townhomes. We have established such things through some great examples of involvement of residents. The dog park has been created in Memorial Field area, and we spent $32 million in infrastructure improvements, including city roads, $9.8 million, water delivery system, $12.3 million, and sewer system, $10.4 million. Included in things as well as physical structure improvements are such things as Sizzling Summer Night, now provided in Eastpointe as part of our new relationship with the Recreation Authority of Eastpointe, as well as our collaboration providing effective E911 service in the area with our neighbors, St. Clair Shores and Roseville. In long-term financial planning, the city adopted financial management plan and follow financial policies to guide long-term decisions regarding debt management policy, cash management policy, capital improvement policies, and investment policy, providing guidelines for the city's use of financial resources. As demonstrated by the statements and schedules that are included in the financial section of this report, the city continues to meet its responsibility for sound fiscal management. The preparation of the financial report on a timely basis was made possible by the dedicated service of the entire staff of the Department of Finance, the Office of City Management, and our independent auditors, Plant Moran, represented here tonight. In closing, without the leadership and support of the City Council and Mayor, preparation report of this standard would not have been possible. If I may then turn to Finance Director Mr. Blum to discuss the report in the management and discussion and analysis section.
Okay, Madam Mayor and Council. I'm going to run through some highlights of this year's finances. If the format looks familiar, it's because it's the one we used during the SMORSA presentations. I did that specifically because I wanted to start with the 5-year chart that we were using during our SMORSA discussions. At that time, we had been projecting to use about $3.8 million of fund balance for the fiscal year that just ended, another $4.1 million in the fiscal year that we're currently in, and our 5-year plan, or our 5-year chart only went out 2 years because at that point we were broke and it didn't matter. This is an updated chart that has the actual results for 15 that just ended, our current budget with adjustments for all the contracts that have been approved, and then a forecast going out for the next 5 years. As I mentioned, we had originally projected to use $3.8 million. We only used $1.5 million. Of that, we came in low on expenditures by about $1.5 million. A large chunk of that, about $500,000, was some insurance rebates, but the other $1 million was just in lower expenditures by department heads. They kept the constraints on the spending. And then we had a lot of unstaffed positions, specifically in public safety. $800,000 of that other $1 million was out of the public safety area. And that's, so we cut the expenses significantly there. In addition, the revenues came in about $700,000 higher than we had anticipated, and a large portion of that came from the code enforcement activity, permitting, the functions coming out of the building area, and there was a slight improvement in some of the state funding there. Even with the Samorsa projection, I mean, it does show that we're back in the black, but it also shows that we can't be on a spendthrift activity. We still have to be very constrained on our spending. This is a 20-year millage, and we got to make it last the full 20 years. The projections that we have about a 2% increase in taxes. We had actually anticipated 2% for 2016, and the state cap is going to be 0.33. So there's going to be constant activities coming after us that is going to make it, we just can't take the foot off the pedal on controlling things. I guess is the point on that one. Fund balances. This is the general fund. This is slightly different than the previous one where we ended up at $6.5 million, which was purely the general fund. This reflects the tax reversion fund as part of this, and that's how it's shown within the audited financials. The one thing I want to highlight here is, first of all, the bottom line, the red numbers. You can see that the fund balance has been declining substantially year over year, as we had been projecting. But the line right above it, the unrestricted, that has fluctuated a bit. And the reason is because in 2013, we had to not commit to funding the retiree health care, the OPEB expenditure. And in 2015, we had to not commit to making the pension payment. That's a year-end item, but the reason I want to point that out is if you put it in graph form, this is a little forewarning, the unions are going to focus on that red bar, and they're going to see this jump and think there's all this money sitting there, and they'll fail to look at the trend of the overall fund balance. We had that in 2013 when there was a jump, and we had to explain, no, it's because we didn't commit to the retirees, and it'll be the same thing this year that we didn't commit to the pension. So that's, I just wanted to highlight that one. Some of the other highlights within the financials, and I'm going to reference some page numbers, but don't worry about flipping there. They're there on the handouts for a purpose. On page 20 is some of the enterprise funds. And the one item I wanted to highlight there is the rubbish fund. We have been able to set aside $1 million in investments as an offset to the disposal authority's landfill liability, which nets to this $1.246 million. By the end of this fiscal year, we expect to be able to have that fully covered. And at that point, we'll be able to start ratcheting back the rubbish fee. And if we ever get any settlements over on the disposal authority and we don't pay all the fines to the state, we'll be able to ratchet it back even more. This is designed to be a cost recovery, but I just wanted to point out that we actually do have money set aside for that, unlike some other areas. The other thing also on page 20 is water sewer fund. The combined cash and investments is down to $4.9 million. Last year that was $11.9 million, but that was an intentional use of the funds that we had set aside. We had built up funds to handle all the infrastructure projects we've been doing, and that is where on page 43 you'll see that we put money into the utility system, into the buildings and improvements. That was by design. Nobody should be surprised, but the point being that we probably are now at the tail end of our big projects, and we will get back to a more normal course of work. Right now, we project probably $2.5 million a year in activity instead of these 8 and 10 and 6.6 million worth of activity there. And in addition to the water sewer side, as previously mentioned, we've been putting money into infrastructure. And again, this year we put in over $4 million into roads, sidewalks, and building improvements. And that is what keeps this city in good shape. Some other final highlights I wanted to make is in last year's report, there were 2 funds that were in a deficit position. That was the street lighting fund and the motor pool. We submitted our corrective action plans to the state, and we did what we said we were going to do, and those deficits are eliminated. We have none in this year's report. On page 70 of the financials, you'll find a section where it talks about the areas that have been over budget. We are not supposed to be over budget in any of these, but it happens sometimes. In the law area, that is where our legal expenses go, and we had some, well, I call it last minute. It was activity after we did our last budget amendment, but there was a lot of dangerous building hearings that went on, and then some union arbitrations, and some of that is timing. It could have happened in July, and we wouldn't be talking about it. It happened in June. We ended up over budget. Sometimes it happens. On the judicial, that's actually the 38th District Court expenditures. It's a small amount, but it's driven by the court-appointed attorneys, which we have no control over who shows up. The court-appointed attorneys were actually over budget for that line item by $73,000, but the court underspent in all their other areas to keep that down to a $3,500 item. $500 in transfers out, shame on us, no biggie. And then major streets, that is over by almost $200,000. That is a result of the road construction activity and the timing of what was going on. The contractors got going earlier, the weather was good, they made more progress than we had anticipated. This is money that would have been spent this year, it got spent last year, it's just a year-end timing. And while it is over budget, it's not, in the overall scheme of things, it really doesn't affect much. The other highlight is the pension was transferred to MERS prior to year end. I'm assuming the auditor is going to touch on that, so I'm not going to. And overall, it was a hectic year, but we had a successful year. And that is it. This one, you guys are up.
Turn it over to Mr. Dave Helisek, Mr. Tim St. Andrew from Plant Moran.
Good evening. My name's Dave Helisek. I'm an audit partner with Plant Moran, and with me this evening is Tim St. Andrew and Stephanie Burrell. And we're here to discuss the results of the annual audit for the City of Eastpointe for the year ended June 30, 2015. You should have 3 documents that were generated by our firm in front of you this evening. The largest one, I believe yours is probably covered, is the financial statement. You'll see a secondary letter, which is a required communication to those charged with governance. We're going to spend a little bit of time in each of these documents this evening, but the majority of our presentation will be the graph package that was handed out earlier this evening. I think Mr. Duchesne and Mr. Blum both did a great job of summarizing whose statements these really are. So the information, while it is compiled by our firm, it is really from information that is put together by the city, provided for audit. We take that information. We do some of the testing that some of your predecessors actually would have seen prior to the audit starting. We actually communicate to the mayor and members of city council regarding the whole audit process, what we deem to be the high-risk areas, how we're going to attack those, how we're going to tailor our audit programs, and give the city council the opportunity to actually suggest to us areas that might be of concern to them, and we incorporate that as part of our audit discussion as well, or our audit preparation as well. So prior to this evening's meeting, Tim and I did meet with the city manager and the city finance director to go through this audited financial statement, really page by page, fund by fund, to ensure the information that was turned over for audit by the finance department was properly incorporated and reported and recorded in this document. We probably spent about two and a half hours going through it. We're not going to do that this evening, but feel free on anything that we don't cover this evening at the end of our presentation. I think one of the 3 or 4 of us will try to answer all of your questions. As Mr. Duchesne had indicated in his presentation, really the only part of this financial statement that is truly ours is on page 1, 2, and 3. If I could ask you to turn there real quick. Again, this is the larger document, which I think's got a black cover on it. And this is the independent auditor's report, often referred to as the audit opinion. So we were able to give the City of Eastpointe's financial statements an unmodified opinion, which is the highest level of assurance that we can give a set of financial statements. What that means is these statements as presented fairly reflect the financial position of the city as of June 30, 2015, and the change in that financial position, or the revenues, the expenditures, and the cash flows that are reported within the document. It's an opinion that the city strives for on an annual basis, and it's one we were once again happy to supply the city after a result of our audit procedures. Within the audit opinion, however, on page 2, I do want to draw your attention in the middle of the, about a third of the way down the second page, or page 2, the emphasis of matter. The emphasis of matter is to draw attention to a reader of the statements that there's been a change in the way that the audited financial statements have been presented in comparison to the prior year. So we discussed for a number of years leading up to this audit year that there was going to be a significant implementation of GASB standard number 68 that the city was going to have to undertake and report in this year's statement. And those of you who may not be familiar with GASB 68, what it was doing for the first time is reporting either the overfunding or the underfunding of a pension liability actually in the balance sheet of a statement, a statement of net position for the first time, we'll say ever. Historically, that information was available. It was just available within the notes to the financial statement, but now it's been brought forward into the statement. You can see that on page 13. But if I'd ask you to turn to page 13. And it's probably easier to go from the bottom up. So right above the bold line that says deferred inflows of resources, you're going to see 2 lines above that. And it'll say net pension liability. It should be easy to see because it is the largest number in that statement. So again, what the net pension liability is, and you can you'll see that note 13 can get you some additional information. It draws you back near page 50. But what it is it's taking the assets. Now these were actually assets in the system before it got transferred to MERS. So really it's putting it at June 30, 2014. And comparing that to the actuarially determined liability for pension benefits that have been earned or expected to be earned as of that same date. So when you compare those two numbers, the city on a citywide basis has an underfunded liability of almost $31 million. Now again, that is information that has been reported in this document historically. It's just been reported into a different place. The good news, if there's a good news of reporting a liability this high, is if you look into the statement on page 50, you will see actually that liability is decreased compared to the previous years. So from an overall standpoint, it's about 60% funded. I think we're seeing most of our pensions that are similar in size and has an employee base both age-wise, experience-wise, and basically the age of the community being in that 60 to 70% range right now. So you're going to be seeing this reported on a go-forward basis, and again, it'll be actuarially determined and reported within the document. So with that, I'm going to turn it over to Tim. He's going to cover the graphs, and then I'm going to talk a little bit more about another upcoming standard that's going to have an even more significant impact on what your statements are going to look like 2 or 3 years down the road. Tim?
Thanks, Dave. Good evening, everyone. This is why I went into accounting and not IT. So the intent of this presentation really is just to, and there's only a handful of slides, but it is really just to cover some of the highlights within the financial statements, focusing mainly on the general fund. And I'll try my best not to repeat anything that Mr. Blum said in his presentation. But the first slide we have here is the general fund revenue, comparing 2015 to the prior 2 years. And I will focus on the first line in the table, just property taxes, as that is your largest source of revenue, at 51% of the general fund revenue this year. The property tax revenue was down 2% this year compared to last year, and that would correlate directly with the 2% reduction in the city's taxable value this year. If you were to compare this year's taxable value to the 2008 levels, the city is actually down almost 50% from those levels. The good news is that for the July 1st of 15 levy, so the year that we're currently in, there was a 2% increase. So the city is trending in the right direction. But certainly if you look over the last 6 or 7 years, you guys have had a serious revenue deficiency when it comes to taxes that you've been dealing with. And as we'll get to the next couple slides about the general fund expenditures and the fund balance, it's really clear that the city has done a great job in looking to cut costs, because clearly getting out of this issue wasn't going to be on the revenue side, it was going to be on the cost side. The next slide is the general fund expenditures, again comparing 2015 to the prior 2 years. Overall expenditures in the general fund were down $300,000 this year. And as Mr. Blum had indicated, most of that is due to vacancies, personnel vacancies that weren't filled this year. The city was, in the general fund, overall under budget by $1 million. That would equate to about a 6% favorable variance, actual expenditures being under budget. And that really isn't a city council or a finance department thing. It really does take a citywide effort for each department to be under budget like that. That means that the department heads are looking at the budget, they're monitoring the budget, and making sure that the costs do come in under that budget that was established by the city council. The next slide we have here is the general fund balance, and we're comparing the fund balance to the annual expenditures. And despite those efforts to reduce cost, fund balance did decline this year by $1.3 million, which, as Mr. Blum indicated, was $1.5 million better than what was budgeted. And I would say without those efforts to reduce cost, these declines that you're seeing in these 3 years would have been much, much deeper. And I know the administration spends a lot of time on forward-thinking initiatives, and specifically the 5-year plan. And I think having that 5-year plan allowed the city to forecast out. You were able to see these issues, which allowed you to react ahead of time. And even though these are decreasing fund balance numbers, you were able to maintain a level of fund balance because of those efforts and because of that forward thinking. And this slide covers the classifications of fund balance, which I will just pass up because Mr. Blum did speak to these and the changes compared to last year. The last graph we have for you is on the water and sewer fund, and this compares the operating revenue to the operating expenses, and you can see the blue and the red lines are symbols for the working capital and the cash balances. So for 2015, the operating expenses did exceed the operating revenues, and that was because the water and sewer costs simply outpaced the rate increases for the water and sewer this year. And as Mr. Blum indicated, the working capital and the cash balances did go down because of investments that were made into the system this year. This year alone it was $6.6 million. And if you were to look back 5 to 7 years, you'd see that this water and sewer fund was actually building reserves up. And because of those reserves that you built up, over the last 3 years, the city was able to invest almost $18 million into the system, and $14 million of that was paid by the city, and the remaining 4 was debt that was issued. So I think that says a lot about the city's commitment to investing in its infrastructure. Happy to address any questions on that. If there are none, I'll invite Dave back up to go through the letter.
When you're saying debt acquisition, you're talking about SRF's state revolving funds?
Correct.
Thanks, Tim. So as I had mentioned earlier, prior to the beginning of the audit, we had sent out a communication to the members of City Council talking about what it was we were going to do as part of our audit procedures. And the auditing standards also require us to have a similar communication at the end of the audit. Normally, there's two communications, one under AU 260 and another under AU 265. But when you're looking at this letter, what you may notice is really there's only one recorded communication in here. Reason being is the first communication has to do with internal control. And while an audit is not a financial audit is not an internal control audit, we do assess the internal control system and test it and tailor audit programs around their strengths and their weaknesses. We identify that through communications we have with the finance department. We have a number of questionnaires that we go over, have them fill out. We then test them to make sure that they're operating as indicated in this communication. When there's an instance that it doesn't appear that those controls are as effective as they could be, we may have something deemed either a significant deficiency or material weakness. And in those cases, we'd have a separate communication that we'd issue at this point that would let this body know that. You'll see that because of a lack of a communication, really nothing came to our attention as a result of all of our testing and our analysis that deemed that there was any sort of weakness or deficiency that needed to be reported at this time. So we're happy to do that. It really doesn't happen that often with the city, township, or village that we audit. A lot of times there'll be journal entries that'll reach a significant level and then we're required to report them out. But I just think that really shows what a great job the whole finance department did in reporting and recording the information in this large document. I mean, there's tens of thousands of transactions that are running through here, and Mr. Blum and Tim had indicated, that we went through the general fund and the water and sewer fund. We're not even talking about the agency funds and the tax dollars, not only your tax dollars, but you're collecting on behalf of other taxing units. So with that amount of activity and the fact that it didn't result in any sort of communication, just really shows, the level that your department is working at. Section 1 of the letter, the required communication to those charged with governance. This is really just bringing back around our initial communication. It's really telling, again, what our responsibilities were, what our scope, what our timing was, what we were going to test. And you really want this to be kind of as plain and vanilla as possible. You're looking for exceptions. And I know you've had a chance to read it, but I'll just give you an overview, but that there's no exceptions in this letter as reported. You've adopted all the new standards that you were required to adopt. It does talk a little bit about some of the required estimates that need to be made. Not everything is, voucher payable, check a bank rec. An audit does involve some sort of estimates as well. We had no difficulties performing the audit. We had no disagreements with management in interpretation and reporting of the standards. To be honest, if we did, we probably wouldn't have an unmodified opinion. We'd have some sort of qualification, and that really isn't a fun discussion to have at a meeting like this. The last part of our letter, Section 2, the legislative and informational type items, this is really information we'd like to share with you on what's happening kind of outside of these four walls that will impact the city as well as other cities, townships, and villages within the state of Michigan. So under legacy cost, I mean, that's something, Mr. Duchesne and Mr. Blum had both addressed during their presentation. We addressed it as far as the implementation of GASB 68 and the reporting of the unfunded pension liability. You'll see on the bottom of page 5 that what the city just implemented for pensions In 2017 and 2018, really you're going to start addressing for your post-retirement benefits. So basically, just like the pension, those amounts that have been earned or expected to be earned will now be reported in that same place on the statement, just a line below. As far as the percentage funding, I can tell you, in comparison to your pension fund, and even though it's out 3 years, that percentage funding is going to be much lower than it was for the pension. And the reason being is, it wasn't even required to be measured until about 10 years ago. So it used to be you just pay as you go as part of your annual budget. You actually, back in under GASB 43 and 45, for the first time, you had to start measuring that. So it was included in the financial statements. However, unlike pensions, which require when you have an actuarial report done, you get an actual required contribution, the Michigan Constitution requires that you make that contribution in the pension fund. There's not a similar carve-out in the Constitution as it relates to the post-employment benefit. So really how most communities are operating is you're getting credit for the actual payments that you're making, and when you can try to put some extra monies aside. And that really talks to what Mr. Bloom had indicated earlier about the commitments in that fund balance as it related to pension and OPEB amounts. Not that we want to bring that number back up on the screen, but when you take a look at that unassigned balance, which was 1.9 million, I think, in the general fund, that seems like a really big number, but when we see this OPEB number come back on, it's going to be in the tens of millions of dollars. So there's always going to be room for you to continue to think about funding that OPEB cost when it's the right, when it's the funds to do it. So just remember that liability is going to be out there, and you're going to be able to see that coming forward in the next couple years. On page 6, not quite as hard-hitting. Just wanted to give you a brief background on revenue sharing. So revenue sharing is in its second year of the CVTRS, the City, Village, Township Revenue Sharing, which replaced EVIP, which replaced statutory revenue sharing, which is about maybe 40 to 50% at best at a funding level compared to the year 2000. CVTRS continues to be a line item budget in the state's budget. So that means, there's an expectation that it will continue. If it doesn't, it would devastate a lot of local units if it were to be pulled out, but it's something you need to continue to monitor. As the state went through its budget process in the past year, we try to monitor some of those estimates, and actually in the May projection, there were some small communities that actually had fell out of formula on this, which was obviously concerning to us as well as those communities. It wasn't a fun communication to have. Hey, we're seeing the main number, looks like yours is gone. It actually came back on in August and was in place for the beginning of the state's fiscal year. So that just shows that you need to monitor it. We send out the information. When we get it, I know your involvement, either in the league or the MGFOA, is going to provide you some information on that as well. On page 7, this is more of an FYI type of thing. Any time that, on a go-forward basis, the city expends more than $750,000 in federal expenditures, you're required to have a separate federal program audit. That number, I use that 750 number, that's actually up from $500,000 under the previous rules. And while the city doesn't have it that often, it has happened on occasion. So the number, the threshold is a lot higher, so hopefully it'll be on less occasions when it comes around to that. But the fact that the city doesn't have an A133 where we're actually auditing it, or federal programs audit, there's a new super circular out that has really changed a lot of the compliance requirements on a global basis as it relates to federal funding. I know that we've made some materials and some webinars available to the finance department so that they're aware of it. And we just remind you that the rules are in place regardless of whether or not you have an A-133 or federal programs audit, because the grantor could come in and basically have an on-site visit to determine if you're in compliance with any of those items. And then finally, the last item, on top of page 8, I don't want to spend any time really on RetroPay because I think it's something that we've talked about enough, and I think you all are familiar with it. That's back in play in public safety. But the last item on the performance audits. So back about 3 years ago now, about this time of year, October, November, I think all cities and villages actually received a communication from MDOT saying, we're going to start auditing your Act 51 monies, which from an auditor standpoint, that was kind of interesting because we thought we were already doing that because that information is included in your financial statement, and we're doing the financial auditing of that and actually opining on it. So they were using originally the term audit pretty loosely. It turns out it's going to be a performance audit that they initially were going to entail. I believe they figured out just what a commitment of resources that was going to take. So I think what they're saying right now is they're going to perform some, or you'll have to hire someone to do these audits. The performance audits, as it relates to Act 51, will be in place for the state's fiscal year end for the city's fiscal year end June 30, 2017. It's still writing the procedures. It appears it's going to be more non-financial. But as soon as we get the specifics on that, clearly we'll pass it along to the city so you can be prepared for whatever audit is going to come along. So with that, we had a lot of information we covered this evening. We'd be happy to cover from an audit perspective anything that you need further clarification about, or if there's anything that we didn't cover and you feel that we're the ones to ask, we'd be happy to address that at this time.
Anyone? No. No?
I'm curious on this Act 51, what, they just want to find out if we're buying concrete at a cheap price, or? I mean,
Dave?
It might be that. When you look at it, they're saying it's an MDOT employee or it's an independent CPA, which is kind of, I don't want to say it's confusing. It's an interesting choice of a professional to perform this, because again, we're already doing a lot of the financial information. In a performance operation, while we can take a look at really how a department might be organized and if it could run more efficiently, a lot of things that really relate to efficiency in Act 51 tend to be more engineering based. And whether or not you bought the right concrete based on, and I don't even want to sound silly if I try to talk about engineering, but that's really, they're going to give us a report and we'll make our way through it.
Basically, they do not know what it means. They are talking in terms of performance auditing, much like they're talking in terms of when they came out with EVIP. They did not know what that means. This is a political response, again, to wanting to squander away road funds on something other than what the state residents are intending. They believe that people you just got to get smarter with your road transportation money and everything will be fine.
MDOT's doing a good job.
And they're doing such a terrific job, you can see why we look to them as models. We already also have to duplicate and file our audit with them, and the F-65 has to be separately filed with MDOT because they can't find it within their organization. So if I come across a little bit pleasant and happy about this, it again is more process without purpose. And it is simply to cover it up, John. I mean, make it seem like the locals are squandering away valuable road money, and you won't have to do the correct, honorable, and necessary thing and raise funds for your roads. But that's just a short opinion.
So does this go back to the development of the roads themselves, or the building of the roads? Because
No idea.
because the residents have said over and over again that the quality of the roads as they're built is so poor that they don't last. So this would go back to, Dave, to your thing about the engineering.
Yeah, I'd love to be able to answer that question, but Tim, I don't think we've seen specific steps
They
as
probably
to what
haven't
this
written
is
it
going
yet.
to entail.
No, they are
We don't
dra-
expect it to be
they-
financial, though.
They tried to draw on it, well, they're trying to make a hybrid of this, that there's some performance component where the metric goes into, you know, a measure in some way they can compare it to either surrounding states or as they did when they were doing the, one of our road proposals. They try to tie this into even things like per capita and then return on investment based on aging in place and things of the infrastructure. So, I mean, unfortunately, as Dave categorized it very well, it's again it's a nice sounding statement. It makes some sense. They're going to call on people to re-audit the auditors, I guess not assuming that you audited the audit properly, or maybe there's something they're going to uncover differently. So but, you know, again, unfortunately, we've seen it before and we'll probably see it again.
You think it's by chance Washington beating up the state?
No, Washington can't figure out where the state is with highway funds, so it would not be them. They have even less, I think, performance metrics and measures in the state.
It's the state, when you hear the word metric, you know where it's coming from.
It's always fun.
So I would feel that we'd have better information on where this is going a year from now. But again, if we get any information in the meantime, we will make sure our method of communication that normally is an email blast so that you'd all get that information and you'd be up to date probably as fast as we are.
No further questions?
Madam Mayor, this is, we have submitted the reports. They are management's and the auditor's final reports. So I recommend the council receive and file, and these audits need to be delivered to the state of Michigan.
Do we have a motion?
And upon approval, we will upload that to the state's website.
Do we have a
I
motion?
just had a question. So what does it exactly mean to just motion to receive and file? Because, I mean, of course, we haven't, you know, at least I couldn't read these 78 pages in the half hour before the meeting. Like, can we just do that a week from now on Tuesday at our meeting? Because,
Well, these documents are final. The management and the auditors won't be changing them.
You can't change them at all.
So to receive and file means you are not rendering an individual opinion on the quality content of the audit, but you are recognizing that it has been filed by the people you've hired to manage and to provide that independent auditors under the state statute. And you do have to deliver it to the state in a timely manner at this point to ensure you're in compliance. So it doesn't commit you more than that, but it is necessary the council recognize and receive the audit.
sounds good.
So do we have a motion?
I will motion to receive and file the annual financial report for fiscal year 2014, 2015, which also has supplemental, well, let me start over here. We'll motion to receive and file the City of Eastpointe annual financial report with supplemental information for year ending June 30, 2015.
Support.
Move support. Please call the roll.
Councilperson DeMonico?
Yes.
Councilperson Marion?
Yes.
Councilperson Lucido?
Yes.
Councilperson Kleinfeld?
Yes.
Mayor Pixley?
Yes. And we would move to hearing of the public, but there's no public there. So we'll move to mayor and council reports, and we'll start with Mr. Kleinfeld.
I just want to say thank you to our city manager, finance director, and Plant Moran for the presentation.
Thank you. Ms. Lucido?
I have nothing to report.
It was a very concise synopsis of a ton of information. Thank you.
We were not often called concise.
There's always a first.
Mr. DeMonico?
All right, thank you, Madam Mayor. Yeah, thank you for coming out and going through all this with us. Appreciate it. And thank you, Steve. Thank you, Randy, for doing a great job as usual. And then I know there's probably not much public listening, but I gave a wrong date at our last meeting for the the Moonlight Madness, and it's not this Friday, it was last Friday, so I hope nobody took my word on that and shows up, but I just wanted to say that now since we did have a meeting before then. And that was all. Thank you, Madam Mayor.
Thank you. I would just like to say congratulations one more time to Steve and to Randy for doing an exceptional job. And it's so nice to get that second page and everything looks so good and they don't have any problems with what we've done. And thank you again to both of you for an outstanding job. It's always so nice to see you, and we know that it's going to be a fantastic audit every single time, with all those little clauses and recommendations and things to tell us what's going to happen in the future.
It's our pleasure, and Tim and I thank you, but Stephanie does all the work, so. No, she does most of the work. She's the one here every day. She's new to the account this year. She did a terrific job, actually.
Stephanie is hiding right there.
Yeah, I mean, it worked, I thought it worked, I thought the audit went very well. I didn't really talk about it. They're working with Randy and Steve and their staffs has been great, once again.
Stephanie, maybe next year you'll be doing the presentation, and
If she comes back, I mean, she isn't committed to that yet.
all right, we'll entertain a motion for adjournment.
So moved.
Support?
Support.
Please call the roll.
Councilperson DeMonico?
Yes.
Councilperson Lucido?
Yes.
Councilperson Kleinfeld?
Yes.
Councilperson Marion?
Yes.
Mayor Pixley?
Yes. Meeting's adjourned at 7:50.
Thank you all.